You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, how's everybody doing? It's Jonathan. Welcome to Masters in Trading Live. And Masters in Trading Live, every single day we get on here, 11 o'clock Eastern, to go over our trade of the day. Each day we're going to go over a few different topics or tidbits for the market. Today we're going to talk about short-term options. Short-term options are exploding onto the scene. You might have read about ODTE options. If you're not familiar with those, I'm going to walk you through. Tell you, I wasn't that familiar with them until I started looking through them, and I realized I trade them all the time. VIX, one day. We talk about VIX term structure. VIX, it's so important. VIX is just your measure of risk. We're going to get into VIX term structure and talk about a one-day measurement of the VIX. One thing I love about working with my corporate partners is their mantra is prove it. Every single thing that we do, whenever we share a trade, we share those trades live. Whenever we cover a trade, we're going to cover those trades live. So we believe in prove it. We want to show you that when we're suggesting something, there are reasons behind them, but also whether they work or whether they don't. And then finally, I'll take you to our trade of the day, which is extremely synergistic with the rest of the presentation. So let's go to the charts. Very excited about this one, and let's get going. I want to start with just understanding ODTE options. Options with 1 day to expiration. These have gained popularity due to their potential for high returns amidst short-term volatility plays. These instruments cater to traders looking for quick, substantial gains with a very short investment horizon. For those who have been watching Masters in Trading Live, we talk about insurance trades. Insurance trades are a way to protect your account from short-term spikes in the VIX. Insurance trades can be used as ODTE option trades. Trading of zero-day options has absolutely exploded. I'm going to go over 8 or 9 reasons of why ODTE options need our attention. For one, rapid growth. Look at that growth in the options. I actually started trading options on the floor Chicago Options Exchange 2008, 2010, 2011, right around the time options were having exponential growth. You want to go where the volume is going. The volume is going to short-term options contracts. In addition, rapid growth, high trading volume, great liquidity. Risk managed trading. What do we mean by that? Well, risk managed trading means we can risk a fixed amount before you get into a trade. You know exactly what your risk is. You decide if you're comfortable with that risk, and then you make a bet. So for instance, right in front of you, let me pull up a little pen here. Right now, I just have the calls because I want to make this as clear as possible for you guys. 0 days until expiration. Stocks trading at 431. Okay, Qs are trading at 431. 434 strike. 38 cents. If you think the QQQs are going to rally, we should probably rally higher, right? If we think the QQQs are going to rally to 433, and you think by expiration we're going to get above there, well, for $38 per option contract, you could put that trade on. You could buy one for $38, 38 cents. You'll never lose more. You can't lose more. That's risk managed trading. Super straightforward. It's an efficient use of capital. Why? Because you decide how much you're willing to risk before you get into that trade. Low transaction costs. Again, high liquidity. I certainly didn't need to add that twice. Tight spreads. Tight spreads means 37 cents bid at 38 cents. This is your spread. Market makers are willing to buy and they're willing to sell. So if you want to buy, you have to buy from this side. If you want to sell, you have to sell from this side. But this is only 1 penny wide. We love these tight spreads. That's a great benefit to trading short-term ODT options. Event-driven trading, you guys have seen this as insurance policies going into non-farm payroll. That's an event-driven trade that we were able to buy short-term Qs before that big event. Now, this material right here was released from the Chicago Board Options Exchange. And the reason I shared it is we want to go where the growth is, and 104% gain in short-term options in Asia Pacific 2022-2023. The CBOE is investing a ton of money into these short-term options. Why? Finally, I don't think I've ever seen one of the major exchanges in Chicago looking after you, looking after the retail trader. And that's how things are changing. Because spreads are getting so tight, this benefits the retail trader. It was never like this, so now retail can take advantage of these excellent markets. Finally, global growth. Global growth, obviously we're seeing Asia Pacific increase by 100%. Options are going global. Another thing from the CBOE, as I was doing research into ODTE, and I had to put a sad face because we don't like when investors get sad. Wah! Well, investors were complaining that the VIX, the 30-day measure of expected volatility, doesn't really cover the whole story, right? There's a 23-day contract, a 30-day contract, a 37-day contract. Well, now they're expanding VIX term structure. I'll come back to that because VIX term structure is now going to look like this. We have our 1-day VIX. This is our VIX that normally most people just follow VIX. 23-day VIN, N, near, far. And then we got 90-day, 180-day, 360-day. Follow VIX term structure. Okay? Those who follow VIX term structure look like this. Those who do not, they tend to look like that. That's just from personal experience, guys. Masters in trading, we do share short-term trades. We've shared 3 short-term trades in the QQQ in just April alone. Now, these are not technically ODTE trades. These are trades with 1 or 2 weeks. Now, they become ODTE trades on that very last day. But if you want, go to the YouTube channel or sign up mastersintrading.com/live and watch the recordings from April 4th. We bought some insurance in the Qs for 279% gain and 117% gain. And then our last trade is still open. We have an open trade right now. We shared that trade April 24th. And that trade is right here, April 24th. We are buying the 440 calls for $1.72. That's $172 of risk. You can never lose more. And right now, they're trading at 238. Now, you may be thinking, hey, Jonathan, should we cover? You could cover. Nobody ever went broke taking profits. Very smart editor said that to me just once. But for me, man, I think these suckers can go a lot higher. We still got 9 days. We are at our key line in the sand in the QQQs, 433. If we could hold this crucial level, I think that we can rally up to 440 and beyond. That's why I want to hold this position. So if you do have this position, again, nobody ever went broke taking profits. But if you don't mind being a little patient and going for a much bigger gain, I like holding this position, expecting a rally through that 433. Next trade is our trade of the day. Our trade of the day is because of the growth of short-term options. Someone who's been following the Chicago exchange scene very closely, going back to 2000. CBOE, I've never seen them do something for the retail trader. They cater toward the public. What I found very interesting is April 11th, 2022. ODTE options launch. Once these launch, what else do we notice? The stock launches as well. CBOE is investing real money into the expansion of ODTE options. And because of that, I'm going to share a trade in CBOE Global Markets. The trade that I like is 53 days out. This includes CBOE's upcoming earnings. Now, historically, CBOE is not a big mover based on its earnings. Some companies move a ton after an earnings release. Other companies, not so much. CBOE is going to be in that latter area of not so much. Volatility is low, not that big of a deal. What I like, stocks at 180, 181. Buying 185 calls to open, and then selling 195 calls to open. Now, well, these markets don't look very good. I'm sure there's much better markets here. I probably grabbed this right at the opening. Let me just pull up a CBOE. Yeah, markets are much better right now. So 185, we can be 440 bid. To open, 195, say it's $1.50 to sell. The price of this trade is going to be $1.40 is be 3 is $2.90. How does this work? So you take a $2.90 credit. You take that in. I'm sorry, debit, Johnny boy. Stop it, stop it, stop it. Debit, okay? So here's your debit. Here's your credit. So it's going to be a $2.90 debit. This trade is going to cost $290. What's the most money, if we're darn right, we can make on this trade? 10 minus 290 is going to be 710. So the most that you can make on this is $710, and your risk is $290. This is an upside vertical call spread, betting on CBOE continue to trade higher because of ODTE options. Now, when I first heard about ODTE options, I thought it was a buzzword. I'm like, all right, here's another buzzword. I don't care. But it's not. All they are just short-term option contracts that they give a really peculiar name for the very last day. When you're looking at options, look at them like stock. So with the Qs right now trading 432, the 433 call options, you're just long stock from 433. If we close under 433 by expiration, those will be worthless If we get above 433, you're long 100 shares for every one option that you own. Be open. I'm a big believer that traders need to be creative. We need to look at things from a different lens, from a different angle. That's why we say the creative trader wins. Trade smart. I'll see you live tomorrow, 11 o'clock Eastern Time.
Join us every weekday at live.mastersintrading.com.